Yo, yo, yo. Welcome back to the channel. I saw a lot of people that were pretty excited for my update today on Twitter and everything like that. So I appreciate you guys with all the support and everything. And yeah, so today AMC closed at $39.38. In my outlook yesterday and on Friday, whenever I was talking about what I was expecting for this week, I did say that I was expecting some downside. And I mean, to be honest with you, as people were coming back to me saying, oh, I think it's going to start going up based on a number of factors, including cycle theory, everything like that, I was starting to come back around to say, okay, yeah, I mean, maybe it could move up, right? But turns out that wasn't the case, and we did see some downside today. So what I want to do today is briefly analyze what I think is going on, what may or may not be holding the price action down, and also where we stand as far as where AMC's next big move could come from. Before I continue, I'd like to say that I'm not a financial advisor. Nothing that I say in this video is financial advice. This is for entertainment purposes only. Make your own decisions based on your own due diligence. And without any further ado, let's get on with the video. So, yeah, so the major things that I want to look at here are we have this potential bull trend, as well as this potential kind of rejection zone whenever we've historically run up for AMC. And you could say that perhaps you're developing like a new sort of trend off of this, or like, there are a number of bearish sort of like trend line changes that could be going on. You could make the argument for, but I think that this is pretty much like from a long-term standpoint, it comes right off of this jump off point, right? And this is basically where we're following along now. So zooming in, we have the falling wedge that I've been talking about for weeks at this point. And I think that this is going to be a continuation to the mother of all bear trap series that I was doing previously. Just so that it's an update for the audience that may be drawn to those titles and stuff like that. But basically, we're pretty much where we've been. You see this downward trend here. It's acting as a sort of support, and this more aggressive downtrend here at the top. You can see that we briefly broke above here, and it really just depends on how you draw it, right? Because you could say that maybe we're still underneath it and we sort of got rejected by it, right? It just depends. And as you go on smaller time frames, obviously you can draw it a little bit more precisely and everything like that. But that's not really that big of a deal. It's just the general concept, right? Like where is the price landing? Where is it getting rejected? Another thing that I think is contributing to the rejection that we're seeing right here is Fibonacci retracement from the bottom after the January move to the top of the move in June. You can see here that, and also you can draw it a different way that'll show it as a rejection point, but you can see here that the price really wants to stay on this, what's this, the 0.5, $39.33 level, which is the 0.5 Fibonacci if you measure it this way. It's really getting attracted back to this zone. And to be honest with you, this looks like a healthy retest to me. If you look at it this way, when I say retest, for those who are less familiar, it's you have this real aggressive downtrend. You hit this, which we know is the 0.618 for this shorter term move. Let's just draw that right quick and just pay attention to the yellow lines here, right? So we went right into the golden pocket here on this shorter term Fibonacci. And basically what we're doing now is we're coming back and we're retesting this more significant 0.5 zone that we broke above and then broke below here. And now we came back up and got rejected down by the wedge again to come back down and test this. And you could also say that this is probably and that was the $39.30 level again that we're retesting for those who are listening and maybe can't see on their phones. But yeah, I mean, this is, and also if you draw it this way, this is a rejection of the 0.5 Fibonacci, which is a $40.89 level on the shorter term Fibonacci retracement that we've been drawing. So this is a normal move. I mean, nothing crazy happened today. I know that a lot of people were tweeting, you know, we did go as low as $39.09, you know, so there was a little bit of, I guess, frustration. I know a lot of people were very bullish going into the day, depending on the theory that you subscribe to. A lot of people were excited about today. But I think that the story is still the same as what it was going into today. And really, it's the same story that I've been telling on this chart for a few weeks now. What's happening is we're in a reversal period. And when you're in such a long bear trend, right? Months and months of bearish price action, excuse me. And you just recently got rejected off of this, which I'd say is a good bearish trend line, right? You're squeezing into this more significant region of the chart, and you also have this falling wedge happening. So again, my opinion based on everything that's going on with the stock is that we are in a position for reversal. Bullish reversal. That's my opinion. And my opinion hasn't changed. Nothing that I've said has been discounted by anything that's happened. I've been calling for this for weeks. I think that we're still in a bear trap. And the reason that I think that it's a bear trap is because everyone was looking at this trend line, right? This logarithmic trend line was the trend line that everybody was looking at, right? And so, and I'll get into why I think that maybe we shouldn't care too much about this trend line, and maybe it's a good thing and it's healthy that we're breaking below it. But so this was the trend line that we were respecting, and now we have broken below it. And since everybody was looking at this trend line because it has this touchdown here in early May, and then obviously it kind of rode this trend line for, I mean, months, almost, a month and a half. You know, it was a big deal. And I remember that day. I remember the day that it broke below. That's when I started posting on YouTube. It was this day here, September 15th. And, you know, I'm not going to lie. I mean, I was like, damn, like, that's a pretty big deal that they broke that bear trend. But when I noticed the euphoria and the celebration on the bearish side of the trade, I started to go, maybe this isn't the trend line. And the reason that maybe you don't want this to be the trend line is because this, if we would have stayed here, actually eventually becomes a rising wedge, which is a bearish reversal pattern, right? Eventually, if I would just continue these lines forever, eventually they would meet at a point, and it would that would be a bearish reversal pattern. But now, what we have is a bullish channel that could be developing. If we cement this as support, and then we make our next move up, this is much more like a channel. And I'm sure that at a certain point, I mean, first of all, this line's probably not perfect, but secondly, you know, at a certain point, maybe these do touch, but it's a much more bullish channel after this correction, in my opinion, than what it was previously. So yeah, and if we want to drill down and get into like a smaller, let's get into, you know, the more specific recent price action. For those of you guys who may have not seen my videos before on how I'm seeing everything, I also look at it from an Elliott wave perspective, because Elliott wave helps me kind of determine where we're going to turn around sometimes and stuff like that, especially when you coordinate it with patterns. So I believe that this 5-wave count here up to the $52, $53 zone that we saw is a wave 1 in Elliott wave. And then what I believe we're in right now is an ABC correction. Like this, A, B, C. And maybe we've already finished this ABC correction. And I did tweet out earlier that perhaps what this is a more minor wave 2. And I want to explain that tweet because it confused some people, which I understand, especially if you're not too familiar with Elliott wave. But I just want to reassure everybody right quick before I do that. It's pretty clear to me here that the golden pocket, which is between $37.55 and $38.30, retracement from the run from $29.40-ish all the way to $52.85. This has been respected as support thus far, and we just got rejected off of the 0.5. It's not that big of a deal. What I think is this is a wave 2. Okay, let me think. I'm just thinking on how I can make this more simple. Okay, so this is a wave 1. The run from 29 to 52. Okay, from 52 down to 37, the 0.618 retracement is a wave 2, right? And then we're going into what I believe is a wave 3, which is typically the most explosive wave. But the way that Elliott wave works isn't that you just get a big wave. You see this first wave here, you can see you have all this choppiness, right? That makes up this wave 1. That's why I counted 1, 2, 3, 4, 5 initially with it. And then if you zoom in even closer, right? This is even this wave 1 right here, starting from the $29 level. You could probably count. I've never counted. 1, 2, not probably, certainly can count. 3, 4, 5. Right? So this move here from $29 to $38 essentially. And then you have an ABC down. So A, B, C, or however you want to draw it. I mean, it's not going to be perfect right now because I'm not sitting here like counting it, but like with Elliott wave or with Fibonacci. But and then 1, 2, 3, 4, 5. Right? So within what I'm calling this larger wave 1, you have 1, 2, 3, 4, 5, and then within those 5 waves within that one wave, you have other 5 wave sequences playing out. Does that make sense? I hope that makes sense for you guys. And if not, I do want to make a video that's like more specific and breaks that down. So if you're looking at it from that more, drill down, close up perspective, what I think this is you have your 1, probably like here. It's quick rundown. 2, 3, 4, 5. Okay. And then what we're seeing here is now a retracement of this. And this is what's so cool about this stuff. I mean, as close up as you want to get with this, you can. And look at that. I mean, this is a beautiful retracement right down here to touch the respective 0.618. We're almost there. And we're actually there in post, actually, which is $39.17. And right now we're at $39.18. And so the way that you count that retracement, right, is A, B, C. Or, ABC, like this. And you can see that it respects these levels on the way down. Look at this. It literally was, and I remember looking at the chart. It looked so funny earlier. Whenever I first looked at the chart today, I woke up a little late, but you can see that. Make sure I keep it accurate here. Between the $40.27 level and the $39.77 level, look at all this trading that was happening. I mean, this thing sat in this pocket of price action for most of the day today. It started the day high here at $41.88. And I think that might be why. I bet you, I mean, I missed out on pre-market and stuff, but I bet everybody was pumped up whenever that happened. And then boom, they immediately got shot down. Yeah, so, I mean, to be honest with you, this, to me, is a wave 1, okay? Okay, yeah. That's what I want to show. All right, so because we're going into wave 3, okay, we're pretty good on time. I just like to be in depth and show you guys my entire process. So what I think now is that this is wave 1. Let me think of how I want to say this, okay? This is wave 1, 2, 3, 4, 5. And then we can measure that in a second. But I think that this is wave 1. This is a bigger wave 1. Okay, yeah, that's what I'm trying to say. Sorry. Everybody forget everything that I just said in the past, like, 2 minutes, okay? Why don't you edit your videos? It's much easier to just record them and then post them, okay? Do you want the videos or not? I'm just kidding. I'm just kidding. This is such a normal retracement, guys. This is so normal. This is so normal. Oh man, I think that maybe you see some downside, a little bit more downside to like this $39 level. I think that we start moving up after that. But what I'm trying to say is, of this wave 3, because of the concept that I presented earlier, you have in this wave 3, which we can measure what I think the more macro wave 3 is going to be. So let's do that with our fib extension that we've used before. The way that you use this is you measure from the bottom of a move, which I have at $29.30-ish cents, to the top, which is $52.86-ish cents, and then you go back to the bottom, which is our recent bottom here at $37.41 when the world was crumbling down. You guys remember that? So this move, this wave 3, let's just say it goes to the 1.618 Fibonacci, which would be $75.44. Wow, that sounds really good. I'm sure a lot of people would appreciate that on the bullish side of this trade. So how do we get there? Well, we get there through a 5-wave sequence within this wave 3. And what I believe you're seeing here is a methodical wave 1, 2, maybe 3, 4, 5, perhaps, something like this, that actually represents wave 1 of wave 3. Hopefully I didn't lose anybody in that. But basically, wherever this move goes, and I actually think wave 3 is going to go much higher than this, if I'm being honest with you. Like, that's my thesis. But just for example's sake, if it were to go to this level on this wave 3, this is how we would get there. And this is slow moving, so I understand people's frustration because it's not moving super fast. Wow, this looks super confusing. But hopefully you followed along in the video. Go back and watch it again, you know, if you need to kind of understand the concept. But I mean, I think that wave 3 of this move, and you got to remember the way that we've predicted, we've gone back and said, hey, you could have predicted this move with this and this move with this, is we go back and we do the macro trend-based fib extension, right? Which from here you would do so the bottom, this move, the top here to the bottom here, assuming this is the bottom down here when it went to $28.77 or whatever. And then these would be the larger implied Fibonacci levels that you would be looking for if the move is up, right? And like I said, you can't predict the future, but using these tools, you certainly can get a better idea of what's possible, especially if the problem is predicting whether or not you're at a bottom and you're going to move up from here, or if you're actually going to correct further, right? That's the harder part of this. But as you can see here, as I've displayed in other videos, if you measured from the bottom of the move at the end of December, which is like $1.85, all the way to the top of the $20 move, and then back down to this $5 move here after that blow up in January, the 3.618 Fibonacci level predicted the top within like pennies, right? So we know that this tool is reliable. We know that it's a way to measure where we could see the price go. If you apply the same concept and you did it from here, then the 3.618 level based on that would be $270.96. Does this mean that that's going to happen for sure? No. But what it does mean is that, you know, this tool has shown us historically that it does have its ability to be accurate. And just to nail down that point one more time before I go, and I'll let you guys go for the day. If you measure from the bottom all the way back here in March of 2020 to the top here of September of 2020, and then back here to the bottom in October, or even better. Oh wait, hold on. Dude, I measured this before and it was perfect. Maybe we don't go back as far as March. That's what it is, I think. Oh. Look, I'm learning with you guys. I think maybe it's here. There's one that predicts the peaky peak top like crazy. But anyway, even this is good enough. If you measured from the bottom in March to the top in September, which is $8-ish, September 2020, by the way, to the bottom again here, maybe it's here, in January, $1.95, you can see here that the price gets stopped out by the 2.618 Fibonacci level. And it trades down and it actually respects these levels along the way. You can see where price tends to turn around is right around these Fibonacci levels, right? So I encourage you guys to go download TradingView on your phone or on your PC or your Mac, whatever, and play around with these tools, you know, the tools that I use in this, and go learn about Elliott wave theory, learn about Fibonacci and the power of these tools, because I think they're playing a big role in this play. So I think they're important to understand so that you can understand the emotions that are going into the play, how people are feeling as a result of what's going on. Because I'll be honest with you, I think people were frustrated today. I saw on my tweets and stuff like that. But at the end of the day, we're still hanging out right up here, right? We're in our wedge. We're chilling. Big chilling, man. We're about to run into this trend line. Also, before I go, I'll show you these other trend lines that maybe are worth watching. You know, we're kind of riding this one like this, you could say, right? From the beginning of this move, that double bottom that we saw, if you draw that trend line. And what's really freaky about this trend line is that if you draw it back far enough, you can actually see the price getting rejected in like March by it. And also like early February, it got rejected by this level, this trend line here. So clearly this trend line does act as some form of support or resistance whenever it's met. And maybe this could be a jump off point right here, right? Maybe this could be the move that that breaks our falling wedge that we've been following. So yeah, anyway, if you like the video, make sure you drop a like on it if you haven't already. Drop a comment down below. I appreciate you guys' support. And yeah, I'm optimistic. I think that in the next few days you're gonna see some bullish price action. That's my opinion based on everything that we analyzed today and took a look at. And yeah. I appreciate you guys so much. Hit me up on Twitter at David Marino Jr. And until next time, Have a good rest of your day. Don't think about AMC stock for the rest of the day. Take it easy. I'm going to the gym. Bye.